One of the big things that people are talking about right now is the Tax Cut and Jobs Act and what's going to expire. And if you Google it, you'll get all kinds of articles and things about it.
Yep.
You know, basically what people need to understand about that is that, if you don't do anything and you don't do any planning, most people's taxes are going to go up somewhere between 1 and 4%. And 1 and 4% may not seem like a lot, but if you're already stretched, if you're already, sort of living paycheck to paycheck or, trying to save for college or whatever, I mean, that's just eating into what you're being able to save. So certainly planning with respect to the Tax Cut and Jobs Act and what's going to happen makes a lot of sense. So we can get more specific about it if you want. There are something like 23 different things that are going to expire as of December 31st, 2025. We're not going to talk about all those today.
Good.
But I think one of the big things is that the tax brackets are going to change, right? So we're going to go back to the tax rates that were in place in 2017, and it affects really everybody across the board. So it affects people at the very highest levels, and it affects most people or almost everybody all the way down the tax tables. The other thing that's going to change in there is that the standard deduction, which right now for a married couple is about $27,000, is going to go back to the old standard deduction. It'll be about $16,000. But it's hard to evaluate all that just thinking about it and reading the articles because, the standard deduction goes away, or goes down, I should say, but certain things come back that you can deduct. So you can deduct all of your state and local taxes, which have been limited. You have maybe the potential for deducting more interest on your mortgage. You have the possibility of being able to deduct employee business expenses. All those things kind of come back, and they were taken out in the Jobs Jobs Act. So those are some of the things that are going to impact as well. I didn't mention, but the personal exemptions come back. We didn't have personal exemptions. And it affects that, and it affects the child tax credit. So all these things are changing, and that's another good reason why it makes sense to have somebody who's knowledgeable about the changes that are going to occur and be able to run a calculation and a projection as to, well, what is your situation going to be? Is there anything that you can do now to avoid that?